This is the AI News Flash for April 18th, 9 p.m. UTC. First up, Google and Perplexity are taking opposite paths on advertising in the AI search era. Google is embedding sponsored suggestions directly inside AI-generated responses, porting its traditional ad-based revenue model into AI interfaces. Perplexity is going the opposite way, committing to a fully ad-free premium strategy that sells precision to high-intent users. Perplexity Chief Communications Officer Jesse Dwyer pushed back hard, saying analysts view the monetization question too narrowly and that Perplexity serves people whose decisions are GDP-altering or history-making. The split suggests AI search monetization may hinge on user intent rather than query volume, creating a strategic fault line between impression maximization and premium precision. Google also faces a trust risk, since inserting ads into AI answers, where accuracy is paramount, could erode user confidence. Next, AI is rapidly absorbing venture capital, forcing crypto firms to pivot their strategy. CoinDesk reports that in 2025, 40 cents of every crypto VC dollar went to AI-focused companies, more than double the prior year. In the first quarter of 2026, AI companies raised about $242 billion, or roughly 80% of total global venture funding. Gartner estimates total AI-related spending will reach $2.52 trillion this year, and the capital concentration is pulling adjacent sectors into adaptation mode. Crypto platforms are moving faster than traditional finance on AI deployment, leveraging always-on markets and programmable infrastructure.
A symbolic example, Alcoa is in advanced talks to sell its dormant Massena East smelter in upstate New York to Bitcoin mining firm NYD. With the deal expected to close by mid-2026, it shows heavy industrial assets being repurposed for AI and mining compute at accelerating pace.
Third, major AI models are now being used for crypto price forecasting in a new public test case. After XRP rallied to $1.5 and pulled back to $1.45, ChatGPT and Claude were asked to predict year-end prices under identical conditions. ChatGPT projects $2.00 to $3.5, assuming the Clarity Act passes with over $2 billion in ETF inflows, and a bull case of $4 to $6 if Bitcoin hits 100K. Claude took a more conservative view, placing 45% probability on a $1.60 to $2.4 thousand range, with a 25% bullish scenario of $3 to $4.5 thousand. Claude flagged the Strait of Hormuz reversal as weakening Bitcoin's tailwind and absent rate cuts as a headwind. Both models anchor on the Clarity Act as the key variable, but diverge sharply on near-term momentum. AI-driven financial forecasting is democratizing market analysis while exposing model-to-model disagreement as a new investment risk factor. Fourth, the Iran war is reviving stagflation fears in the global economy, with knock-on effects for AI infrastructure investment. S&P Global economist Chris Williamson warned that stagflation, the ominous mix of surging prices and stalling growth, evokes the 1970s nightmare. U.S. retail gasoline averaged around $4 per gallon during the conflict, squeezing budget-constrained consumers on other spending. The IMF Managing Director Kristalina Georgieva said the world must learn to operate in an environment of high and permanent uncertainty, adding that recovery would take considerable time even if the war ended tomorrow. Inflation indicators from Canada to South Africa already show war-driven price pressure. Energy cost surges hit AI data center operations directly, threatening the profitability of the $650 billion plus combined 2026 capex plans of the four major hyperscalers. Kevin Warsh's Fed chair confirmation hearing will test how monetary policy balances rate cut demands against inflation vigilance, with the AI semiconductor supply chain's geopolitical fragility in focus. That's all for this AI News Flash.